Hi, this is Anthony with TradingETFs.com. Today is May 17th, 2020, and we're going to be doing a market update. We actually received a request from Griffin on our YouTube channel asking about an update on the major indices, including Google, Facebook, Amazon, and Tesla. So we're going to go ahead and provide this update, and let's go ahead and get right into it. First thing we're going to do is start off with the SPY ETF. We put out a video back on April 26th, and we talked about how we had received a sell signal back on the 27th of February. We got a little bit of a counter trend rally back to the upside and then completely collapsed. We then talked about a buy signal that we had our oscillator gave, and you can see here we bumped up a few days and then we pulled back, and we've pretty much been going sideways ever since. So the market right now is just waiting for some trigger event. It still looks to us like we're going to move to the upside and at least get to the 200-day moving average, if not break the 200-day moving average. So that's still our most likely scenario we're looking at this point. You can see here even our oscillator has been going sideways, really not a lot of momentum either way, but we are still above the zero line, which means we're still positive in terms of momentum. We had a little bit of a pullback on Thursday, and then we had a reversal by the end of the day, and then Friday we had another slightly up day, so we're still expecting to be able to move to the upside here. And the other thing we wanted to mention or talk about is, and Griffin on our YouTube channel brought this up, about the S&P consists of just a handful of stocks that make up 20% of the SPY ETF. And when we go over to Market Watch, you can see here under the SPY ETF, the percentage of assets, 5.58, is in Microsoft, Apple, Amazon, Facebook, Berkshire Hathaway, and Google. So right now the SPY ETF is pretty lopsided, with just a handful of stocks that are determining the direction of the SPY ETF. So as we look into some of the individual stocks that we just showed, you can see where our bias is still to the upside based on those 5 other stocks. So let's take a look first at the Diamond ETF. Similar situation here. We got a sell signal, we got a counter trend rally to the upside, and then a collapse. We then got a buy signal here. We had a counter trend correction and then a move back to the upside, but still gone sideways. We still have positive momentum to the upside, and we got that reversal Thursday. We got a little bit of an upside movement on Friday, so we're still expecting the market to resolve to the upside. And there's really nothing changing at this point from our video, our last video back on April 26th, I believe. The Q ETF, you can see here, it's been substantially different. For one thing, we are already above the 200-day moving average, where the Diamond is below the 200-day moving average, and the SPY is also below the 200-day moving average. And obviously the Q is more dominated by technology, and those same 5 stocks are moving the Qs to the upside, and so again we're above the 200-day moving average on the Q. And as of right now, we don't really see anything that's giving us a clue that it's about to turn back to the downside. Thursday we had a little bit of a correction, but by the end of the day it reversed back to the upside, and then Friday we had another upside move. So we're still expecting the market to continue to the upside. You can see here we tried to cover a little bit of this gap here, and so we didn't quite get up there to close it. So that would be my expectation, is that we close the gap, and then we're not too far away from hitting another all-time high. So again, there's nothing that we're looking at that would suggest that we're going to collapse without first moving to the upside, maybe flushing out whatever shorts are left, and then we can turn back to the downside. In terms of the individual stocks, going back to the SPY, the reason I'm looking at the market continuing to the upside is that when we look at Microsoft, you can see here that, again, we got last Thursday, we got a downside move, but by the end of the day, closed to the upside. We also had another upside move. It closed here at 183.16, but you can see here we've got a wick here, so that tried to move up to 186 and then it got sold off. We have already covered the gap previously. In the Qs, we still have a partially unfilled gap, but with Microsoft, we've already cleared the gap and filled the gap, and we tested pretty much the all-time high. We had a little bit of a correction. Now we're moving back up again. You can see volume here just increased a bit. So in terms of Microsoft, we're not seeing anything that would show immediately that the market would completely turn around and collapse. We still expect it to test this all-time high, and then from there you probably would get a reversal. Next would be Apple. Apple, in our April 26th video, this is our website here, TradingETFs.com. If you click on the featured tab, you'll see all of the recent articles or videos that we've done. And in this video here, the bear market over, question mark, we discussed Apple's earnings coming up, and they published their earnings on April 30th. So we were talking about how Apple most likely into their earnings would go from about the 280 price range, I think it was right in here, about 280, let's say, that it was going to go up to the 300 price range, and we got a test of the 300 price range and then pulled back, but then that was only a day's pullback, and then you can see we went on to move up to 320. We talked about a gap, and Apple filled the gap, and then now it's pulled back. So at this point, Apple looks more susceptible to a pullback here versus Microsoft, where Microsoft was trying to move higher on Friday. It still closed positive. Apple, on the other hand, closed down. So we would say that Apple is more susceptible at this point to continuing to pull back. It covered its gap, it tested the all-time high, and then it fell off. So possibly Apple is an advanced sign that maybe towards the end of the week, next week, we would start seeing the market to pull back. But right now, the other stocks here, Microsoft, and even if we go to Amazon, you can see here has been going sideways since April 16th and really hasn't moved anywhere. You've got the Bollinger Bands are squeezing, so that means that there's going to be a move, a pretty quick move, and at this point our expectation would be is that we continue to move higher on Amazon, and if we get past this price of $24.72, then you're going to see a new all-time high. So because these Bollinger Bands are squeezing, you're going to see a pretty quick move to the upside if it does in fact resolve to the upside. We can certainly move down in price, but right now, because Amazon is one of the few stocks that is moving up, or at least not moving down, then it can get a lot of money just thrown at it. The momentum managers are just going to look at what stocks are moving up, and that's where they're going to pile money into. So our expectation is still that Amazon can resolve to the upside and hit a new all-time high. It would not be surprising to me that Amazon hits the 2600 level. So Amazon looks fine at this point. Just waiting for it to choose which direction these Bollinger Bands are going to get squeezed in. The next one would be Facebook. Facebook, you can see here, hasn't gone anywhere since April 30th, but you can see Thursday we got a move to the downside, closed higher. Friday got a strong move to the upside, closed almost at the high of the day at 210. And so you can also notice here that Facebook closed the gap and tested the all-time high and then pulled back, but now it's going to make another run of it. Volume increased just a little bit. Our oscillator is still soundly in the positive zone, so I don't see anything that would suggest that we're going to see a rapid collapse or correction. We're probably going to see it move up and completely retest this high back here, which would make it about the let's say 222 price level. So that's where our expectation is at this point. And then when we look at Google, similar situation here. We got a pullback for a couple days, ended on the high of the day, and then Friday we got another pretty strong move to the upside. Google does have a gap here from February 21st, and so that's at 1478. So we probably can see Google move up to the upside here and probably cover this gap is what we would expect at this point. Our oscillator is still showing positive momentum, so there isn't anything that would suggest that we're going to see an imminent collapse in Google at this point. The last stock was Tesla. Tesla is a little bit different situation, and I'll explain why that is. So you can see here that since April 16th, Tesla really hasn't gone anywhere. It's gone sideways for the most part. There are a lot of people that are unbelieving of the move to the upside, and there's an awful lot of angst in the public about them reopening their manufacturing in California. But despite all that, the stock really hasn't moved anywhere in the last few weeks or so. And our oscillator here, our long-term oscillator, has been going sideways, so it's not really losing momentum, not really gaining momentum. It's simply just waiting here. We got up to this high here was 944, and you can see on this day here we only were able to get up to, looks like 869. So we're still very close to the all-time high. So from a daily chart pattern, it's still just a waiting game. There's not really any clue that we're on the verge of some big move. But if we move this chart to a weekly chart, here's where we can get more a different look at what's going on. So you can see here we got an all-time high here in the price range of about 900 or so. I mean, the wick, which shows 944, but yeah, 964. I'm sorry. But if we just look at it from a standpoint of how far away is price from the 200-day moving average. So if we just go to 200-day moving average up to the price, and I'm going to use this candle here, this one with the wick. I'd rather use just the highest closing candle. So right now it's 214% above the 200-day moving average on this one high. And if we do the same with where we're currently at, Actually, let me go back. Start from the 200-day and up. So you can see we're roughly 160% above the 200-day moving average. So when you look at Tesla, it's definitely a momentum name, but you have to look at it from a standpoint of how much more room to the upside do you have in terms of trading. Now, you can get another retest of this 964 level, or 944 level here, which is, a good percentage amount above where it's currently traded at. But it's going to move so fast that you have to ask yourself whether it's even worth it to try to capture the additional upside when we're already 160% above the 200-day moving average. You can see here that price was 215, or let's just say 215, and then you can see it completely collapsed. So now we're back similar to the range above the 200-day moving average. So you can certainly see the stock move up some more, but the probabilities would suggest that even if you did see another 15% move to the upside, let's say, the probabilities would suggest that you're then going to see a pretty big move to the downside. And if we did get that, then you'd see a clear double top on Tesla. So from our standpoint, when you look at a daily chart, it's pretty much you're looking at it and saying, okay, it's going sideways, not really doing very much. Momentum's really not doing very much either. And so there's really no there's no clear clue of which way it's going to go. But when you look at it from a weekly standpoint, here you can at least say, okay, well, there is some room to the upside, but can you capture that before it completely moves to the downside and collapses? My perspective is that you can try to use stop losses, but it's going to happen so quickly that, and in fact, if it's a gap to the downside, your stop loss may not even be hit. So if you're looking at it from a standpoint of is this a trade to the upside, you can try and capture this last 15-20% move, but your bigger risk is if that doesn't occur, then how can you get out of the position without incurring much bigger losses? So that's from our standpoint at this point. It's certainly good to a good stock to watch, but whether or not you actually want to take a position, that's a totally different story. And in our opinion, it seems like there's risk not only to the upside, but substantial risk to the downside. So I think for right now, that's about what we see. We're not seeing a lot of, going back to the SPY, we're not seeing a lot of conviction either way. What we're basing our analysis on is the fact that we had just crossed above the zero line. Momentum's been going sideways, price has been going sideways, but this 200-day moving average acts like a magnet. So if there's any momentum over the next couple days here to the upside, then you're going to most likely see that we're going to get to this 200-day moving average and most likely move above it. Probably even look to cover the gap here. You can see that some of the stocks we've gone over here, the ones that have covered gaps, are the ones that are now moving back to the downside. So that's our expectation as far as the SPY is concerned, is that we still have this gap here that can be covered before we actually see the market move to the downside more dramatic. The Dow, same situation here. It's a little bit farther away from the 200-day moving average, but it's still the same analysis. We expect it to get up to the 200-day moving average first before we start seeing a much bigger collapse. So that's about it for now. Appreciate the request to do a specific video on some stocks and some of these major ETFs. Certainly, if you have any questions, reach out to us. I did want to mention that we just opened a Patreon account for our specific trades. You can go to our website here on the right side. You'll see Become a Patron. And so, like for instance, this SLV, we posted the video on May 12th, but we actually posted it in our Patreon account on May 8th. So we do give advanced notification to you through our Patreon account for some of the trades that we're looking at and what actions you can take. So again, appreciate the request. Hope you guys have a great day. Stay safe.